The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone, to another edition of Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. I'll be with you for the next 55 minutes or so till, 4 o'clock Eastern. I always get that time change mixed up, me being here in Southern California. But if you want to give me a call, talk about this market, number to use is 877-927-6648. 877-927-6648. My show airs twice a week at TFNN on Tuesdays and Thursdays from 3 to 4 Eastern. And my show is also available as a podcast on iTunes. If you can't listen live, just go over to iTunes and you can do a search for TFNN or Ken Shreve, something like that, and you can get the show that way. And don't forget, you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well. If you want to look at charts with me on today's show, you can do that live at tfnn.com and Tiger TV. Channel 1, the show is carried live, and it's archived in channel 13, and you can also watch Tiger TV now with your smartphone, so that's pretty cool as well. Well, what looked like a day of accumulation for the major averages, unfortunately, looks like it's turning into a day of distribution. Nothing really new there. If you've been listening to the show in recent weeks, listen, distribution really started in the market, and when I say distribution, I'm talking about higher volume declines, professional selling, institutional selling, profit taking, whatever you want to call it. But distribution is important to pay attention to when you see it start to crop up in the major averages. And it really started in late March. And that was the time to start getting defensive, time to start moving from offense to defense. And so today you just really have more of the same. Let's start by taking a look at the NASDAQ 100 because this chart is not looking that great. Really, it is still holding above its 50-day simple moving average, but not by much. I'm going to go ahead and refresh this chart of the NASDAQ 100, and then I'll put it back up in Tiger TV. We'll see the NASDAQ 100 right now is down close to 1.2% to 2676. 2676. It's only about 4 or 5 points from its 50-day moving average. You can see it's sitting right at the line. Of course, there's a chance that it may give up this key support level. If it does, again, to reiterate what I've been saying in recent weeks, I'm really not expecting a long, drawn-out period of selling here. I wouldn't be surprised to see one more shakeout that's going to kind of wipe the slate clean and, hopefully will pave the way for new buyers to come in. Is it sell in May, go away? Will it be sell in April, go away? Who knows? But right now it's just important to pay attention to price and volume in the major averages, and certainly the risk does outweigh the reward in the market right now. So that's the NASDAQ 100. NASDAQ 100 being hurt by shares of Apple. It has a weighting of close to I think it's close to 20% now in the NASDAQ 100, but let's take a look at Apple. This is another stock clearly that is looking tired here. You can see distribution in its chart as well, a series of higher volume declines. That points to institutional selling, probably some profit taking. Since we're in the middle of first quarter earnings season, there may be some trepidation, maybe some nervousness about what this company is going to report when they release first quarter results at the end of this month. But I don't think there's any doubt you're going to see really strong bottom line and top line growth, and I'm not convinced that there's going to be a negative surprise here. I think the recent selling in Apple is more just plain old vanilla profit taking after a major price move. But Apple looking vulnerable here. All right, let's take a look at the NASDAQ Composite. NASDAQ Composite, not quite as bad a shape as the NASDAQ 100. The composite is down about 0.9%. Call it about 27 points to 3,004. So it's really trying to hold that 3,000 level. Interesting that the NASDAQ Composite's 50-day moving average right now is at 3,010. So it is about 5 points below its 50-day moving average right now. It's been trying to hold this support level, but again, it might not be able to do it if it breaks below that in convincingly heavy volume. And it does look like, I mean, when we're talking about today being another distribution day for the market, volume on the New York Stock Exchange and NASDAQ is on pace to come in considerably higher than what we saw yesterday. Okay, it's ironic because we're going to go over some big upside gainers in the market today. Some of the stocks have fallen off their highs, but really some fantastic earnings reports late Wednesday, early Thursday, so we'll go over some of those in a moment. But the bottom line is that the major averages are vulnerable here. One of the main investing tenets that I learned when I started working for Investors Business Daily in the mid-1990s was that most stocks are going to follow the trend of the market. So if the market is in a downtrend, 3 out of 4 stocks are just going to follow that downtrend. Excuse me, there's always going to be a few that buck the trend, but most stocks follow the trend of the market, so it's very important to pay attention to what's happening in the major averages. Look for signs of a new uptrend. When you see signs of a new downtrend or a pullback taking shape, nothing wrong with moving to defense, trimming holdings in your portfolio, taking partial profits or even full profits, and that is what I have generally been doing since late March. I've nibbled at a stock here and a stock there, and I know that the buys may not work out. So I'm really trying to hold on to my best performers right now. I've nibbled selectively, and we'll see how it goes. But right now, for the Dow and S&P 500, we're 7 days into a rally attempt that started on April 11th. Okay, on April 11th, that was the first up day for the Dow and S&P 500. Now we're 7 days into a rally attempt. We still want to be looking for a follow-through day, something else that I learned to recognize when I used to work at Investors Business Daily, a way to detect a new market uptrend taking shape. We want to see some sort of follow-through in coming days and weeks where an index rises at least 1.5% to 2% in higher volume than the day before. Last time we saw a follow-through day was in the NASDAQ on December 20th. And you can look back on a daily chart of the NASDAQ on December 20th, see that big percentage gain, 3% in higher volume, and that really launched a nice uptrend over the next 3 months. So not completely ready to give up on this market rally yet, even though the market looks vulnerable. So hopefully in coming days or maybe over the next week or two, we'll see a sign of strength in either the S&P 500 or the NASDAQ. That would signal perhaps a positive shift in market sentiment. But until that happens, it's a pretty risky environment for new buys, generally speaking. So volume on the New York Stock Exchange and NASDAQ, again, set to come in quite a bit higher than what we saw Wednesday. So go ahead and take a look at the S&P 500 here. S&P 500 large cap index right now is down close to 0.9%. Call it 12 points to 1370. It is now below its 50-day moving average as well, about 7 points thereabouts. So yeah, market's vulnerable here. So I think defense is perfectly fine. If you've got some nice winners in the first quarter, nothing wrong with scraping a little off the table here. I mentioned Priceline. Priceline was a big winner in the model portfolio, my Ultimate Growth Stocks model portfolio that I run over at TFNN. If you want to get a free trial, you can do that right on the homepage. But I got rid of Priceline. Sold it for a nice gain right on this day here. Its second higher volume decline. Priceline is still holding above its 50-day moving average at 663. Shares are right now trading around 715. So I could have waited for it to come all the way down to its 50-day. I think there's a chance it could happen, even though Priceline continues to hold well above that support level. But I decided to play it safe and take profits after its second higher volume decline. And again, that was earlier this month, right on this day, right here. So I've been playing defense. I still have a considerable cash position in the model portfolio, so not trying to be a hero here. Going to mostly wait for the selling to run its course. And again, what I've been saying is that I would not be surprised to see the indices come in maybe 5 to 7% off their recent highs. At this point, I still think we're only about 4 to 5% from recent highs. So, bottom line is that excesses have been a lot of excess, I should say, was built up in the market in the first quarter. Tremendous gains for a lot of different stocks. And when you get excesses built up, whether it's a name like Priceline or Apple, some of the other big winners, the pullback and the consolidation process usually takes a little while to fully play out. In other words, the market's just not going to correct for 1 week or 2 weeks, and then that's going to be the end of it. So just play defense for now. Don't try to be a hero. So today, day 7 of a rally attempt for the Dow and S&P 500. For the NASDAQ Composite, only day 3. In fact, why don't we go back to the NASDAQ Composite, and I'll show you the first day of the rally attempt was just this past Tuesday. See this up day right here? Now, the low on Monday, if that low gets undercut, then we're going to just start looking for the first day of a rally attempt again. But the NASDAQ is still holding above its low set on Monday. If it undercuts, the rally attempt will be dead, and then we look for day 1 of a rally attempt for the composite, and then follow through a week after that. So, follow-through days aren't foolproof. There's no guarantee that we're going to get one in the near term, but it is always important to remember when one occurs. All right, let's check in on the UUP. This is the ETF that basically tracks the U.S. dollar index. It's comprised of a bunch of long U.S. dollar contracts. Interesting that with a lot of weakness in the market today, the UUP is only down, it's basically flat, unchanged at 22.06. So dollar really not doing that much. I'll get a quote for you with the U.S. dollar index in just a minute. But before I do that, why don't we just check in on the long bond here, the TLT. This is the iShares Barclays 20-year Treasury bond fund, and it is up not much, 28 cents, 0.2% to 117.22. So that's what's going on with the dollar and bonds, and then the U.S. dollar index right now trading around 79.62, up just a little bit, up about 8 ticks or so, 0.1%. So that's what's going on with the dollar and bonds. Let's check in on the GLD. Spider Gold Trust is mostly unchanged, down 2 cents. That's it, just down 2 cents to 159.29. June gold was up $1.80 to $1,641.40 an ounce. May silver up 29 cents, almost 1% to $39.78 an ounce. So gold, to me, it's just kind of trying to find a bottom here. A lot of institutional selling in the GLD recently. It's going to take heavy volume gains really for this technical picture to be fixed, but still looks troubled to me. Folks, thanks for tuning in. Coming back with segment number 2 in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everybody, to Breakout Investing. Ken Shreve with you. Thanks very much for tuning in. So index is in a little bit of trouble here. They're trading near session lows. Volume looks like it's going to be considerably higher than what we saw Wednesday. So another day of distribution in the market. But that said, some really big earnings stories today. So let's take a look at a couple of them. Mellanox Technologies, just an absolutely extraordinary move in this stock today. A small cap stock with a market cap of $2.5 billion. It's not a tiny company by any means, but it's on the thinly traded side. Average daily volume, what is it, around 250,000 shares. Thereabouts, make it 200,000 shares, so kind of a thinly traded stock here, but monster move today, up 50%. I would say that's a pretty big move, up $21.84 to $65.17. Pretty big short interest in Mellanox Technology, so you probably have a combination of perhaps some funds getting into this stock, buying it for the first time, but also shorts covering their positions as well. But earnings pretty darn good at Mellanox. Earnings up 113% from a year ago to 51 cents a share. Sales growth pretty solid, up 61% to $88.7 million. So a very strong company here. This is another one of these data, cloud computing, storage plays. They make. They're based in Israel. They design integrated circuits for servers, telecom infrastructure equipment, storage, things like that. So they're just in this kind of niche market that is really enjoying very, very strong demand right now. Shares of Mellanox having a really solid day, and heard Tom earlier today talking about a really solid quarter from eBay. Stock is off its highs, but just volume enormous in this name today. eBay having a very good day. eBay normally trades about 10 million shares a day. Volume right now is about 53 million thereabouts. Hit an intraday high of 41.84. Currently trading around $40.26, getting pulled down here with the NASDAQ composite. Still up about 12.2%. Very nice earnings from eBay. PayPal is really the story here. First quarter sales growth at eBay were up better than 30% from a year ago. Total revenue at eBay rose 29%. Year over year to nearly $3.3 billion. Our earnings up 17% to 55 cents a share. So good solid quarter from eBay. Let's take a look at a couple of other earnings here. Cubist Pharmaceuticals, name that I've mentioned on the show before. Cubist is not a breakout. Now you can see the problem here. The stock hit an intraday high of 44. Now it's trading all the way down at its session low. Still up 3% to 41.97. But again, after hitting an intraday high of 44, it is trading near its session low. If anything else, this was a breakout from deep inside of a consolidation, and these can be problematic because don't forget there are people that bought Cubist on the way down here. So what happens? They buy it here. They're sitting on a big loss. Now the stock starts to rally, and then they sell to break even on their investment. So Cubist tried to make a big move today, but too much overhead supply in this stock really is part of the reason it is selling off. Not to mention, again, the broad market is weakening considerably here as we head into the close. In fact, let me just get a quick quote on the major averages. The NASDAQ composite, it's just kind of bouncing around here. It was down 1% a little while ago. Now it's only down 25 points, 0.8% to 3,005. So we'll see how the major averages hold out here. Let's also take a look at earnings from F5. Really a lot of great earnings in tech late yesterday, earlier today. F5 Networks, again, off its highs as well. It's still up close to 8% to 133.84. Great story by Reinhard Krause over at Investors Business Daily. Right on the homepage of investors.com, you can see an interview he did with the CEO of F5 saying the company is going to be coming out with a lot more security products by the end of this year. But the numbers at F5 were pretty darn good. This is a company with a consistent track record of execution. Earnings up 24% to $1.09 a share. Sales up 22% to $339.6 million. So similar to Cubist that we just looked at, F5 also gapping up from a low here, trading in the bottom half of its trading range right now, but pretty solid numbers from F5. And if you really want to get an understanding of what is in store for this company, again, a nice article over at Investors Business Daily on the homepage of investors.com about F5. Some interesting IPOs today as well. Let's take a look at Tumi as we head into the break. Now, it's its first day of trading, so this chart's going to look a little strange. But Tumi is a premium luggage maker. They priced at $18 a share, above the expected range of $15 to $17. Stock is up $8.37 today to $26.37. So a smashing debut for Tumi. All right, folks, next break. We'll be back in 4 minutes. Stick with us. Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone. Yeah, sure would be nice to see the major averages finish in the top half of their trading ranges today. I'm not sure it's going to happen. There seems to be some good volume behind the declines today. It's not out of the question, but let's hope we get some buyers come into this market with about 25 minutes left to go in Thursday's session. Before we went to break, I talked about another successful IPO today from premium luggage maker Tumi. It's ticker TUMI on the NASDAQ. Don't have a lot of fundamental information yet on this company. It's out there. Just got to go get it. But again, they priced at $18 a share. That was well above the expected range of 15 to 17, and the stock is recently trading around 26.37. So big gain for Tumi. And another IPO came public today, SPLK. Funny name here, Splunk. Splunk is this is another data play. Splunk makes software that basically indexes unstructured data on a server so it can be monitored, analyzed, and searched. So call it a cloud computing play, data service play, but hot industry right now. Splunk priced at $17 a share, above the expected range of 11 to 13. Wow, it is trading all the way up at $33.04 a share. So even a better debut for Splunk than Toomey, but both stocks very impressive today. Two other software companies set to come public tomorrow. For now, anyway, it may not happen, but they are scheduled to start trading on Friday. A company called Infoblox and Proofpoint. Infoblox, B-L-O-X. Infoblox and Proofpoint. So don't have tickers on those companies yet, but they will be hopefully coming public tomorrow. Mentioned some great earnings reports also before we went into break. eBay, F5 Networks, Cubist Pharmaceuticals, pretty good numbers there as well. VMware also had good numbers, and this is another cloud computing play, virtualization software. Shares of VMware also getting pulled down by the broad market here. Hit an intraday high of close to $119 a share. Stock is still up 2.3% to $113.86. Definitely trading near its session lows, so sellers in this stock late as well. But the numbers very good at VMware. Earnings up 38% from a year ago to 66 cents a share. Sales up 25% to just over $1 billion. Strong performance, solid demand from the Asia-Pacific region, and also doing well with their enterprise license agreements. Good growth there, so companies that buy VMware's products and services, they sign up for these extended license agreements that pay for service and support. So once customers buy VMware's product, they have it for a long time. So that's good for VMware. Let's take a look at Select Comfort, SCSS. This is a mattress maker. And Select Comfort, the numbers were solid again. This is a company that you see their stores in malls mostly, but yeah, they do that. Specialty mattresses, very comfortable beds. Earnings up 50% from a year ago to 45 cents a share. Sales up 36% to $262.4 million. Stifel Nicolaus raised its price target on Select Comfort to 42 from 37, but it's not helping the stock much. Select Comfort now down $2, 5.7% to 33.24. Came down to its 50-day moving average at 31.20. It is trading up in the top half of its range, but boy, Select Comfort has made a massive price move since the market lows in December. This is another stock that's probably ready to consolidate gains for a period of time. All right, going to our first call for the day. I hope Rick from Longwood, Florida, hasn't been waiting on the line too long. How you doing today, Rick?
I'm doing fine, and no, I didn't have to wait. And thanks, Ken, for taking my call today.
You betcha.
I'm getting a lot of interest here in TWM because it looks like, I want to run it by you. It looks like I got a nice ABC up going, and volumes are supporting an up move for TWM. It seems to be, anyway, and I want your opinion on this.
Yeah, it's probably a low-risk entry point here. I would agree, Rick. I think that the The overall action in the major averages, whether it's the the Russell 2000, certainly is under a lot of a lot of pressure here. The Nasdaq Composite, all the major averages are under pressure. I mean, sellers are in control at this point, so it is a favorable environment to make a negative bet against the small cap index here. I assume you use stops when you trade. You always have an idea. Yeah.
Oh, big time. In fact, for this one, I would put my stop right down about where I think the C point is. Which is somewhere just a little above 30. Maybe I would use 30.
Yeah, something like that. You know what? Again, lots of distribution in this market, and today we had a we had gains for a while. There was a lot of green in my screens. The Nasdaq was up 0.5%, 6%. There was good volume behind the moves, and it looked like buyers were coming in, and then boom, you just get more selling pressure. That has been building in the market, like I said, since late March. So. Oh. The trend is downward until proven otherwise, and I'm just not seeing anything yet that's telling me this market's ready to move higher. So I think my take is that you've got a fairly low risk entry point here.
Yeah, thanks, Ken. What I'm looking at too, the reason I'm picking 30 is because I have about 1.5 point exposure on the downside, so there's my risk. And a 1-to-1 expansion looks like it'll take me up to about 35 on the Fibonacci stuff.
I think, I can't find anything wrong with that logic, and right now it's it's got support right around that 30-50 area. So
30.
If it breaks below that 30-50, you give yourself a little bit of room, but that stop at 30 seems reasonable to me as well.
Well, thanks so much. I think I'll jump in a little bit and see what happens, Ken.
Okay, Rick, appreciate the phone call.
Thank you. Bye-bye.
All right, thanks. All right, moving on to Denver, Colorado. Big market in Denver. Let's talk to Mahari, who wants to talk LCC. Is that right?
Yes, Ken. How you doing?
I'm doing fine, thanks. How are you?
All right. Where do you think it's going to go?
U.S. Airways Group we're talking, right?
Yes.
Okay, now was this earnings today? I didn't. There's so many earnings reports I can't keep track of them all. But is that what we're talking about here?
It looks like it's moving pretty nice, but I don't know how far it's going to go.
Yeah, well, it's up big today for sure. Up 15.5% U.S. Airways to about $9.47. Really looks like it's volume is huge. So your swing point is $9.91. That was the high set back in earlier this year in early February. So what you would expect. Mahari, on a heavy volume move like this is, and the fact that it's holding on to its gains, it's still trading up near its session high. You'd expect some follow through tomorrow, where it could eventually take out that $9.91 high. But very bullish price action in the stock today. This is a chart that was looking pretty good ahead of the numbers today. So I wouldn't be surprised at all to see it take out that 991 level. And then if it does, it's probably not going to be a straight ride up, but see if it can hold on to its gains after that. If it holds on to its gains and trades tightly, shows good support, there's no reason to get rid of it. Just hold on to it, let it work, let it consolidate, and that could pave the way for even another move up.
All right. Thank you so much, Ken.
Okay. Thanks, Mahari.
Bye-bye.
Buy. All right, U.S. Airways Group. Yeah, monster move in that stock today. I think they came out with numbers. Although I don't see it in the database here. So not up to speed on the news there. But monster heavy volume move in U.S. Airways. Another airline. While we're on that. Talking about the airlines, which typically is a very difficult industry to play, but take a look at Spirit Airlines, based in Florida. This is a stock that has been outperforming materially and showing bullish price action today. Looking at it in Tiger TV. Headed into today, it was working on a 6-session winning streak. It recently broke out over, $20 a share thereabouts. It's now trading around 23.08, so it's a little bit extended. But it closed yesterday at. It closed yesterday at $23.16, and on a really rough day for the market, it's at 23.08. So that's what I mean with when a stock makes a big move and then doesn't give back those gains. It's usually a sign of pretty good support. So another solid airline out there for those of you that like to play the airline industry. Spirit Airlines, SAVE on the NASDAQ, and Spirit Airlines is another one of these vibrant new issues that came public last year in May at $12 a share, I think it was. So, it's almost doubled in price since then. But a very efficient, well-run airline where you're not seeing losses quarter after quarter after quarter. In fact, you're seeing the exact opposite. You're seeing robust year-over-year earnings growth and pretty nice top-line growth as well. Let's take a look at some other story stocks today. Gilead Sciences, GILD, Gilead Sciences. Good news from both Gilead and Bristol Myers Squibb today. Let's take a look at Gilead. It is up 12.7% today to 52.54. Once again, trading in the bottom half of its trading range. Hit an intraday high of 54.75, but again, currently at 52.54. So Gilead, the story here is Gilead and Bristol Myers Squibb. They both have this hepatitis C pills, 2 pills that they administer together to treat the liver disease, and they really announced unbelievably strong second stage clinical data on the drugs. And the story here is that Gilead is not sure that they want to proceed with a phase 3 trial with Bristol Myers Squibb, which is interesting. I mean, this is a case as Adam Feuerstein over at The Street, a big biotech guy, well known in the biotech circle. He had a piece on this clinical data earlier today over at The Street. Said it's unfortunate that Gilead may be putting profits ahead of patients' wellness and health. I mean, if these two drugs work, Gilead's pill and Bristol Myers pill, they work well together, and it has the potential to save a lot of lives. Move forward. But Gilead is kind of not sure about that yet, and whether or not it makes it to phase 3 is very much in question right now. But both stocks rallying sharply on this hepatitis C trial data. Gilead up 12.7%, and let's take a look at Bristol Myers Squibb, and we'll see that Bristol Myers Squibb is now up only 1%. But you see, a lot of these charts look very similar today. Big gains early, and then boom, sellers come into this market again, is knocking everything down towards session lows. But Bristol Myers Squibb, after hitting an intraday high of 35, now trading around 33.90, still up 1%, but near session lows. All right, let's check in on the NASDAQ composite here. About what have we got? 12 minutes left to go in Thursday's session. NASDAQ composite sitting right at its 50-day moving average here, down off its lows. Good to see, down about 0.7% now to 3,011. Its 50-day line is at 3,010. So really, NASDAQ composite is definitely at an inflection point here. Is it going to find support at the 50-day line in heavy volume, or is it eventually going to give up the line in heavy volume? What I'll say about that is that the risk outweighs the reward in this market currently. Let's take a look at the NASDAQ 100 that we started off talking about today. NASDAQ 100 is up off its lows, but not by much. It is now down 1% to 2690. 2690, that's about 17 points above its 50-day moving average. So really, market's kind of at an inflection point here. Hopefully, the NASDAQ Composite and NASDAQ 100 will be able to hold these support levels, but I got to tell you, that's a 50-50 at best at this point. And finally, the S&P 500 down 0.5% now to 1378, and same old tune. Its 50-day moving average is at 1379, 1378, right in that area. All right. See what else we have here in terms of earnings. Yeah, how about Sherwin-Williams? Sherwin-Williams. I mean, this thing has been moving as fast as Home Depot has. Super extended here. No way I could justify buying Sherwin-Williams up at its current price level. It has been a monster performer, though. I mean, its chart and Home Depot's chart looks very, very similar. Sherwin-Williams, of course, is a paint store operator. Needs to consolidate gains, but earnings pretty good, up 51% to 95 cents a share. Sales up 15% to $2.1 billion. Still holding support. It touched its 10-day moving average, trading up near its session high, down about 27 cents, though, to 116.88. So still showing strength today, despite being down in price. All right, folks, coming back for the final segment. You're listening to Breakout Investing on TFNN. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. I wanted to check in on shares of Under Armour because it is reporting earnings before the open tomorrow. And Under Armour is just a flat-out strong stock here. Really like its technical setup. Now, earnings is very difficult. You know, how a stock is going to respond to an earnings report. I rarely take a new position in a stock ahead of earnings. I mean, it's tempting to buy technically healthy stocks like Under Armour that are acting well ahead of earnings, but holding off for now. I'm going to hear what the company has to say tomorrow morning. Looking at a swing point of 99.20. 99.20 for Under Armour. That's going to be actually it's 99.35. Excuse me, 99.35. That's going to be this high right in here. But Under Armour down 53 cents today to 96.49. But just in a flat-out good technical setup here. Earnings are only expected to be up 4% to 24 cents a share. Sales up 22% to 380 million. Let's take a look at a weekly chart for Under Armour and see what it's looking like here, and you'll see just a nice bullish technical setup. You had a recent breakout here, and now forming what looks like a little flat base here, firming up at its 10-week moving average. So acting very strong, well supported, not many sellers in the stock at all. So I'm expecting to hear good things from Under Armour tomorrow when it reports. And another interesting name here, ValueClick, VCLK, ValueClick. I've mentioned this name on the show before, but it's in a nice base here today. Tried to make a move earlier today, hit an intraday high of $21.58. It's now at around $21.18, down only a penny on the day. Let's take a look at a weekly chart for ValueClick, and you're going to see another positive technical setup here. Nice base forming with a swing point of 21.50 for ValueClick, and they basically provide. It's a digital media company. Digital media. They provide online advertising campaigns for customers, direct marketers, brand advertisers, things like that. So ValueClick looking pretty good. And finally, SIMO. This stock goes at last check was outperforming nicely today. Still is, actually. I didn't saw this one late, didn't see the news on it, but it is holding its highs, unlike most other stocks in this market. Silicon Motion Technology up 10.6% to 2207. This is another example of a breakout from deep inside a base. I typically don't like to buy breakouts when they occur deep inside a consolidation like this one is. Silicon Motion cleared a swing point today of 2150. It's a fabless chip company, so it means the chips that they are made by other people, but the company designs high-performance, low-power semiconductor solutions for the multimedia consumer electronics market. Earnings are due April 26th. Big growth is expected. EPS up 83% to 33 cents a share. Sales up 41% to 61.2 million. So this is another fast-growing chip company. Fairly liquid with an average daily volume of about 800,000 shares. Small company, though. Only a market cap of about 675 million. But a lot of buyers in the stock today. Coming up after the close, take a look at earnings from Microsoft. This is another high-quality firm that has been under selling pressure ahead of the results after the close today. Stock is underperforming, well off its high, down 5 cents to 31.09 after hitting an intraday high of 31.68. Earnings at Microsoft expected to fall 5% from a year ago to 58 cents a share. Sales up 5% to 17.2 billion. Also, earnings from Chipotle Mexican Grill, a very, very successful stock, very extended. Probably will be held to a high standard when it reports, but Chipotle also due after the close tomorrow. Results from GE, Honeywell, McDonald's, and I mentioned Under Armour. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern, folks. I'll talk to you soon.